A lot of you out there are probably interested in laundromats because we get so many calls every day for laundromats. Everybody's interested in this niche, but very few know how to actually go out and buy them. So without further ado, Jordan, Barry, thank you for joining us.
Hey guys, thank you for having me on. Super excited to be here. Always exciting on a Saturday morning. Well, Saturday morning here, at least. I don't know if it's morning everywhere. People are listening, but Saturday morning to talk laundromats. Super excited to be here. And I am in Hawaii right now. So I'm giving up surf time to be here. I want to just sort of make the case for laundromats here. I have been in the business for almost 12 years now, and I have seen this industry transform lives. And something that I've realized along the way is that 99% of Americans can replace their 9-to-5 income with 1 or 2 laundromats. And when I realized that, that was mind blowing to me because laundromats are one of those weird little businesses that people don't think about a lot until recently, when Cody Sanchez came on and started talking laundromats, and then all the TikTokers, Brandon Schlichter on Investment Joy and Laundromat Girl and all the other people are collecting quarters and getting everybody psyched up about laundromats. But until then, it's been this weird little business that kind of flew under the radar. And what's so great about it, and this is why I originally got into the business, is that laundromats are one of those businesses where you don't have to, there's no one-to-one correlation of time and money, right? It does. If you put more time in, you don't necessarily get more money out. If you put less time, you don't necessarily get less money out. And so it's disassociated from time. So I wouldn't call it passive, but I would call it time flexible, time independent, right? What makes it really appealing is because of the way laundromats are valued, an average base hit, run of the mill, already operating, already cash flowing laundromat should give you a 20% return on your money unleveraged. And so once you talk to Beau and you get that SBA loan and you're at, you've got 80 or 90% leverage on that laundromat, that ROI can go up pretty dramatically there, right? So that right there is already hard to beat. A 20% base hit average deal, no value add whatsoever, no growth in the business, on day one, return on your investment with relatively little time commitment. So here's what's the good news and the bad news about buying laundromats. The good news is valuation is relatively simple in terms of what you need to do valuation to do a valuation on a laundromat, and also in terms of what information you need, at least initially, to do that valuation. So when you go online on Biz Buy Sell, or you talk to a broker, or you do a direct mail with an owner and you get a call back, in order to do that initial valuation, really all you need is 4 numbers. You need 4 numbers. And I'm going to tell you what those 4 numbers are and how you utilize them to actually value a laundromat. Okay. So, I heard the guy right before was talking about boutique hotels, commercial real estate and stuff, right? Commercial real estate's valued on a capitalization rate. Laundromats are valued on a multiple, which is basically just the inverse of a capitalization rate. But a multiple is much simpler. We're simpler people over here. We just want to take out our calculator and hit that multiply sign. So I'd say right now in today's market, because of the increasing popularity, average multiple used to be 3 to 5 times the net operating income. And right now I'm seeing more of like an average of 4.5 to 5.5 times the net operating income. Okay. So that makes it very simple. So obviously what we're going to need first and foremost for the first number is the net operating income. Okay. So we got to have the net operating income. That is the cornerstone of the value of our laundromat. And to that net operating income, we're going to apply this multiple. But the question is, how do we know where on that scale, the 4.5 to 5.5, that multiple is going to be for a particular laundromat? And in order to determine that, that's where these other 3 numbers are going to come in. And again, very, very simple to do. And I'm going to tell you what those 3 numbers are right now. So the first of these 3 numbers to determine the multiple is you've got to know the age of the equipment, age and condition of the machines. Okay. So obviously, older equipment is going to be less valuable than newer equipment. So that puts downward pressure on the multiple, right? So we're going to be on that lower tier, maybe like a 4.5 times multiple. If the equipment's 10 to 15 years old, or older. If you have newer equipment that's maybe 0 to 5 years old, you're going to be on the higher end of obviously of that multiple, right? So we're going to be looking more at like a 5 to 5.5 in today's market right now. Which again, a 5x multiple on a laundromat is a 20% return on your money, assuming you do all your due diligence correctly and all that. And it really is, all the numbers are right, right? Okay, so we need to know the age and condition of the equipment. And then the other two numbers we need to know both have to do with the lease. All right, so the first number we need to know is the rent amount. Okay, now the question I get all the time is, how do I know if a rent amount is a good rent amount or not, right? How do we even determine that? Well, what we do is we look at the rent amount as a percentage of the gross monthly income. Okay, so if we've got, $10,000 a month of gross income coming in, which would be a relatively low volume laundromat, by the way, but I'm just very simple minded. So I'm using very simple numbers here. But if we got $10,000 a month coming in and our rent is $2,500 a month, we've got a 25%, our rent is 25% of the gross income, right? So the question then becomes, is that a good percentage now? What's a good percentage, right? So the number that we're looking for is about 25%. That's sort of the magic number. At that number or below, obviously lower than that is even better. But that number below, you're sitting at the top range of the multiples, right? Between that 5 and 5.5 times the net income there. Once you get above that 25% of ratio of rent to gross income, that's when the multiple begins dropping. That's when the downward pressure kicks in and that multiple becomes dropping. And I'll just say from experience, just a little like framework for you to think through. Once you're hitting like 35% plus, it begins getting more and more difficult to make money unless you have a clear path on how you're going to get that ratio back in shape, right? The easy way to get the ratio back in shape is just make more money, right? Or this, I guess, the simplest way. Okay, so the third number we need to determine the multiple also has to do with the lease, and that is number of years remaining on the lease. Okay, so for a laundromat, long lease is a good lease. A long lease is a safe lease. I always give the example of, if Beau owns a shoe store and his lease is coming up and the landlord says, you know what, tired of smelling like feet around here, we're not going to renew your lease, you're out, like done. Beau says, man, that's a bummer. I got to rent a U-Haul, throw all my shoe boxes and racks in the U-Haul and move down the street, right? Somebody says that, if a landlord says that to a laundromat, you got a lot of infrastructure, a lot of things built, suited specifically for that space, and it's very difficult to relocate. Same thing if the landlord decides, hey, market rents are double where they're at now, so we're going to double or more your rent. That's sort of a double whammy for you, because not only are your expenses going higher, so you're going to actually cash flow less, put less money in your pocket, but also remember the value of our laundromats based on that net operating income. So not only do we lose cash flow, we also lose equity in that scenario. So having a long lease is super beneficial. So the question then is, what's a long lease? What's a short lease? There's no like standard, but here's a framework for you to kind of work through. Anything under 10 years, I'm super uncomfortable with. So what I recommend that you do, if you're looking at a laundromat, say it's got 7 years or 5 years or whatever left, I'm looking to typically add options to that lease, 5-year options, so that if the lease ends in 7 years, I want to add at least 2 more 5-year options that say, hey, at the end of that 7 years, I, as the tenant, have the option to renew that lease, or I, as the tenant, have the option to renegotiate that lease, or I can walk away from the business, or I can sell it. I've got options, right? So if I can add 2 5-year options, that effectively gives me 17 years of the lease. And ideally, like if I was starting a lease from brand new, I would like to have a lease that is a 10-year lease with 2 or 3 5-year options. So we're looking at like 20 years would be ideal lease, right? So anything under 10, you've got to make your offer contingent on getting more time on the lease. And in fact, Beau's probably going to tell you the same thing because they're not going to be able to finance it longer than you have for the lease. So it even just for the financing, you're going to need a longer lease. So that's what you're looking at there. I'm looking for at least 20 years in most scenarios. Almost no scenarios would I recommend that you buy a laundromat without having bare minimum 10 years. And even at 10 years, I'm feeling pretty uncomfortable there. Okay, so we've got our net operating income, and then we're going to apply the multiple somewhere between 4.5 and 5.5 in today's market to that multiple. And to determine sort of where on that spectrum we're looking at the age of the equipment. We're going to look at the rent amount as a percentage of the gross income. And real quick on the rent, just a little nuance. Maybe most of you guys know this, but just in case anybody doesn't, a lot of times for a retail lease, you've got what you call base rent amount. That's what we think of when we think of rent. But a lot of times there's one of 2 other expenses that might go along with it in addition to that base rent. So that would be either what we call a CAM, a common area maintenance expense. It's just what it sounds like. It's the cost to maintain common areas, and the tenants of like a strip center, for example, will split the cost to keep the lights on, to pay for the gardeners, to paint the outside, that kind of stuff. Or you might have what's called a triple net lease. Now, if you don't know what a triple net lease is, it's like the greatest invention ever if you're a commercial landlord, and it's kind of a downer if you own a business in a triple net lease, because basically what that says is you as a tenant are going to pay your rent to me, and then you're also going to pay all of my expenses. And the 3 nets, if you will, of a triple net lease would be the property maintenance, like the CAM, property maintenance, property taxes, and property insurance. So those are in addition to your business maintenance, your business taxes, and your business insurance, right? And again, the tenant split that up. Usually that's split up based on a percentage of your square footage versus the total square footage. That's typically how it's split up there. Okay. So all you need is those 4 numbers there, and you can determine the value of a laundromat.
If you're a solopreneur or small business owner, listen closely. Business growth isn't about working harder. It's about building smarter systems. It's about automation. And that's exactly what GoHigh Level helps you do. Build your funnel, automate your follow-up, manage your team, all in one place. Click the link below, activate your trial, and see how much more efficient, automated, and profitable your business can be in just 30 days. Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.